So I guess the basic question is, are the equity markets actually overvalued given all the uncertainty about the coronavirus, about further government support, and for that matter, even about the election coming up in November?
Yeah, we actually are concerned about valuations at this point. We're actually in the lower for longer camp. We think that market returns are going to be lower from here, and it's going to be a longer trajectory until economic recovery comes back. First of all, valuations, as you mentioned, we also have to worry about the upcoming election. We're having a spike in cases, and all of that is leading to lower mobility and a longer economic recovery. And when you look through all of this, what we see is earnings, which should come back to pre-COVID levels in 2022. And given that, we think the market makes new highs in about 2021. So that's about 5% upside from here.
So if you're an investor, how do you see through all that fog of uncertainty over the short and medium term to some things that you think are sure bets for down the road?
Well, what we're looking at, first of all, is quality investments. So we're looking at some megatrends such as aging, climate, cybersecurity, healthcare. I'm also in technology with digital. You can count on some of these companies that should be growing for a long time. And also, we're looking outside of the U.S. There was a proper V-shaped recovery in China. They've done a great job actually with COVID-19. They're in Beijing. They're able actually to test 10 million citizens in 2 days for COVID. China also has stimulus in place. Their economic growth was positive in the second quarter. So areas like Macau gaming, they're opening up. Visitors are returning from Guangdong, which is where 50% of Macau gaming visitors come from. We're looking areas like that where you can get some beta into your portfolio without worrying about the valuations and the uncertainty in the U.S.
But you also are interested in Brazil, which surprises me a little bit because, as you say, China appears to be doing a pretty good job with coronavirus. Right now, I wouldn't say the same necessarily about Brazil.
Yeah, this is where we're looking for laggards. So while the U.S. markets have really run up and now we have some uncertainty coming, Brazil really is behind us. They're still dealing with the first wave of the COVID crisis. But when you look at Brazil, they had a nice reform story in place. The market returns have been poor there. In the first quarter, they were one of the worst global performing markets that we saw. So still a bit of a laggard trade there, cheaper valuations, uncertainty there. We definitely agree with that.
Saira, what do you think about Europe these days? We have a European summit that's going on right now at the end of the week to try to get something like 750 billion euros into the economy. Is that a better bet for the future?
Europe for us has been challenging because technology has been such a driver of the prior bull market, and even going through the crisis, Europe really is not very levered to technology. So we think Europe is more of a cyclical play. We're not fans of cyclicals for the long term because we don't see strong economic growth. We think it'll be more moderate. So Europe for us, maybe you'll see somewhat of a rebound because of cheap valuations, but not an area where overweight for the long term.
So coming back to the United States for a moment, we are starting to get some earnings out. And one of the things we saw this week actually was some of the mega tech sort of took a bit of a ding. It had been really on a ramp up, and now they started to come back toward earth a little bit. What do you make of that?
I mean, looking at earnings, first of all, we expect them to be down over 40% this quarter just in general. We're seeing upside surprises because of that dismal in terms earnings number that we were expecting. Technology stocks for us is just an example of expectations going too far, a lot of hype because of the COVID crisis and how well that they did. So this is not for us the beginning of a downturn for technology, just more of a blip as we start to adjust to getting back to normal and maybe people watching a little bit less Netflix, but certainly not the end of the road for Netflix.
So you mentioned megatrends, Saira. Give us some examples of sort of the megatrends that would be investable.
So for us, food safety, so wellness, so companies that are focused on wellness, aging, these are, we can look into assisted living facilities. We mentioned climate change. Look for companies that are highly indexed to ESG, online education, fintech, payments companies. These are all trends that will continue for many years and even decades.
What about telemedicine? That seems to be something of a buzzword now, given the COVID-19 pandemic. Is that an investable proposition? Can you look for telemedicine opportunities?
I mean, for us, we think this is a trend that will remain in place. You can look at some of the larger healthcare companies, telemedicine. I think people are just more comfortable using Zoom and not having in-person interactions, and that's a trend that we think will remain in place. Challenging to do it by a pure play on the healthcare area, but you can look into healthcare companies. For example, we like the managed care space in general. So healthcare across the board, we think, is an attractive sector.
Saira, as you look forward in the equity area, how concerned are you that the companies will have to be dialing back on stock buybacks and dividends for that matter? To some extent, the valuations have been supported by that in the past. It's not clear that companies can afford to use their cash that way anymore.
Yeah, I mean, it's true. Earnings, buybacks and dividends usually add 1 to 2% to earnings throughout when companies report. We're not expecting that anymore in our expectations. It's definitely going to be a drag on earnings going forward. So that is an issue, and we've kind of taken that out of our expectations going forward.
Overall, Saira, do you think the market is prepared for something that's not a V, not even a U, but basically sort of a flat-ish recovery from here? I mean, there was a bounce back initially. We all have to recognize that. But now it seems to be flattening out. When you look at the jobless claims, you look at so many indications.
Yeah, I mean, our view is that what you saw in April and May was a V-shaped recovery, but that we're not seeing that anymore. You are seeing not only mobility data pulling back in the states, which are having a resurgence in cases, but you're seeing nationwide people pulling back as they see the news on cases picking up in other areas. So this is a nationwide pullback in mobility. And I think now that the slope of the recovery will be much slower, and that's why our view is more of a longer tailed economic recovery and lower market returns from here.
Do the equity markets have their hopes up about a vaccine?
I think the equity markets do. And, we do have some promising news on vaccines, and, we could get one earlier than expected. But there's a big difference between the vaccine and vaccinations. And I think that path to get people vaccinated is also going to take a long time, even if we do get good news that a vaccine comes out before the end of the year.
Fascinating. But do you advise people to remain fully invested right now in equities?
We do, because for us, market timing is a loser's game. You look at how much money left the markets in March, which was a very bad time to pull out of the markets, and how much trouble that money has had getting back into the market. So for us, it's not about market timing. It's about what do you want to own, quality in the U.S., and get your beta outside of the U.S. and some of these emerging markets.